What's up, everybody? I'm going to recap some trades that we took in my Discord community so far this week, along with a trade that I took today and made over 50% in 7 minutes. Eventually, that same trade went over 300% a few minutes after, but I'm not going to complain. I followed my plan and I made profits. So there's going to be a lot of gems, and you all are going to understand where, why, and how I traded these setups, along with some market context. So be sure to stick around. Please drop a like on this video. I would appreciate it. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. You're definitely missing out if you aren't following. And now, without further ado, let's get right into the video. First part of this review is going to be split for today's action, which is May 4th on Tuesday. And then later on in this video, we're going to go back into yesterday's action, which was Monday, May 3rd. But today was a very good day, and I want to break this down as best as I can. So every day I post pre-market plans in my Discord community. We were first watching Nasdaq, if you trade the future, or QQQ options. We were having pressure to the bulls overnight. We were below a major 1370 support level. We were also below a major demand level. I said this is bearish to me as we have created supply in an existing demand imbalance, which basically zeroes out those buyers because now we have more aggressive sellers, and we wanted to see a move in the first 30 to an hour of the market open. We were watching to see if rallies got sold into. However, below pre-market lows, we can look to play the short side or play QQQ puts, targeting the nearest demand at 135.95. We're moving out of balance, and the rule is to play the direction out of balance unless the opposition is responsive. It's just my rule of thumb and how I play markets that are coming out of balance, that turn into an imbalance. So we had demand at the 135.95 we were targeting, also 135.75. It's an important area that we do not want to get below, or else things will get really bad if they're not bad already. So now that we have that in mind, let's break down this chart briefly. So this demand zone we were watching throughout the overnight session, briefly bouncing off of it. And this is why I wait to post my plans in the morning, because anything could happen and the market consistently generates us new information and we have to adapt and react to what it's presenting us. So we sold off into this demand zone and there were really no signs of buying, was not interested in taking this long. And then we also formed new supply at the 3736 zone. So this kind of invalidated this demand zone. I was not watching this. In fact, from the pre-market plan, we were watching a break below pre-market lows, targeting the demand zone that we had lower as all gates were open. So I just want to show you a little bit of a picture of this demand zone. It's a very important level because we kept bouncing off of it. We bounced off of it last week, once, twice, overnight session. So this is a very, very key area. Also lines up with the 13700, important support key level. So now that we have that in mind, we did get below this, so this becomes invalidated. We do have supply above, and now what I saw was that break below pre-market lows. Like I said, if I go to a 1-minute chart, which I've been watching more in this market, we had an aggressive sell-off down, and then we were slowly moving up, and we acted as resistance at the 13655.3 support level that turned into resistance. Now, this was at the same time, if you follow the S&P 500, which we're also going to go over, this was also aggressively selling off, which added more confluence and more confirmation to this trade, along with other equities such as Apple, such as Tesla, which added more fuel to this sell-off, fire. So I saw this, and at 9:38, I played the QQQ 330 puts. I got in at $1.03. Right at this candle that you're seeing right here, it was a quick stop. What I've noticed is the best trade that I put on work out right away. My risk was super tight, and I knew my reward was pretty high as all things were open to sell off into that demand. Then the market started aggressively selling off. I was up on my position, kept selling off, finally got that push into demand. Now, at the same time, in the intraday commentary tab, I go over my thought process. I say exactly what I'm seeing. Told everybody that I was in QQQ puts. I'm waiting for a quick push to get into demand. It's a very bearish sign if we break the low and stay below that level. A quick push into demand. I'm out of QQQ puts, and then I got all out at 9:45. So I got out at this following candle right here because I followed my plan. It hit demand, and really the market could have bounced here. However, in hindsight, and this is where trading, emotions get involved, I made 50% on this trade as I sold at $1.53. But other traders where their emotions are going through the roof, which happens to me, no one's perfect, it's natural. You're going to see the market continue to move down, right? And your trade that you made 50 cents up here, now down here, these are worth $3, $4. So, you could have made 300% if you held on for another 20 minutes, 15 minutes. But you can never go wrong and complain about profits, because if you complain and get frustrated about this, you are going to try to revenge trade. And if you revenge trade, it's going to be a very bad thing, and it's just going to screw you up emotionally, and it's going to screw your account up with the cash that you have in it. So this is a telltale sign of zero bids in the market. There's zero buyers. And I was telling everybody, do what the market's telling you. Don't look at what you could have made. You followed your plan. It was a perfect entry. I know a lot of members took this and everybody nailed and bailed, and no reason to argue that the market could not have reversed here. So then we started moving off, right? Now this move is overextended. What I'm seeing here is there are zero buyers priced into the market, zero bids, zero effort to move up. So technically this demand zone now gets invalidated if I don't see any signs of buying. We had the last support level. Did I know that the extent of this move was going to be this vicious today and this aggressive? No. However, the market presented some telltale clues to me, and I had to take it, and it was a perfect A+ setup in my books. You only need, one good trade. No reason to force it. You nail and bail it, and you do what the market gives you. So we got below this goodbye level. This was just as a joke. It was a major support level, and at this point, like I said, there's no reason to play puts down here, especially after being so overextended without any relief bounce. Then the market was just playing around here, eventually got below this low. However, the volatility kind of dried out compared to what we saw in the first 30 minutes. And then we started moving down. Let me pull this up. So I was telling everybody at 10 o'clock exactly, there's zero bids in the market. If you miss this downside move, there's zero reason to chase it. I don't want to see anybody take a loss and chase it. This is also good for a small account because of how cheap QQQ and SPY options are. I will make a video on this at some point in the future. However, beautiful sell-off below demand. I didn't even chart any demand zones. We had it actually at 1340, and it actually held. This was a very important level right there. It held. However, perfect analysis and perfect trade on QQQ. Now for the S&P 500, same exact plan as the Nasdaq, moving out of balance. We're playing the direction out of it. On our webinar, we had, or actually later on in this video, you're going to see the importance of the 4163. If we get below it, we have everything open to sell off into the 4148 and then 4144 demand zone. We stay below it. Then we have demand at 4125. It's not going to be good if pressure is on bulls. So that's the S&P context. I traded the QQQ just because of how clean it was and how price was trading in the first 5 minutes. So if I go to a 1 minute chart on the S&P, here we had last week's lows. This was also coming out of balance. It was acting as support in pre-market as we were forming supply at 4175. Market eventually sold off. So right here is another place. Some members did take it long. I was obviously in the Q's trade, so I did not take this. However, perfect sell-off, zero bids. We came into our first target, which could have been a good area to scale out. Like the QQQ trade, hindsight, there was really no reason to panic and no reason to sell on the way down. Eventually came into the 4141 demand zone, double bottomed, made a higher low, could not even get above 4150 or the high that it made here, and then eventually just started messing around and consolidating. And then selling off right into our 4125 demand zone where we broke the low, nice volume to confirm it. And then we had a decent end of day, rally, but pretty much the best move would have been in the first half hour of the market open to play puts. Everything else as the day goes on, I tell members this all the time, the setups for me diminish if volatility dries down. If we wanted to continue selling off and we created supply, rallies got sold into, would have been valid. However, after around 11 o'clock, 12 o'clock-ish, let's just call it, we were just moving up, making higher highs, also making higher lows. However, there really wasn't any momentum or volatility backing the setup. So perfect trade on this as well. The S&P and Nasdaq presented two perfect setups. You have to recognize this and take trades according. To get more context, let's go over the pre-market plan on the S&P 500. We did a webinar last night and we did chart a couple of setups. However, we wanted this to develop a little longer, and going into the morning, we had to be bullish above 4171. And dips, the context of this is dips continuously keep getting bought up. The market last week was very choppy. There was lacking momentum. And we also had supply at 4203 and we had demand at 4185 and a half that we were watching for the market to bounce at. So the way I look at it is, you flip open a book of the market. Last week is the current chapter we're reading. Now it's a new month. Now it's a new week. Are we going to flip to a new chapter, or are we going to continue based off of the action that we saw last week? So that's really to be determined. It really depends on the context. And that's the beauty of not having a bias in the market, because I just play my imbalances. I play my context, gauging participation between buyers and sellers, and then I can make a trading decision based off of it. I'm not guessing with anything. I'm just doing exactly what the market's telling me. So down here in the bottom left, let me just maximize this. We have the S&P 500 right here, and Friday we sold off. Last week, Thursday, was the highest, volatility that we saw. Market sold off, then came back up, and we bounced off of this key 4171 demand zone multiple different times. Last week on Tuesday, last week on Thursday, and last week on Friday after the Chop Fest. And it was providing bounces every single time. So the context of that zone was it was a very strong level. It's in areas where buyers are built into the market. It's where they're finding value, and anything below it, it's safe to say we have, maybe some buyers that are underwater if they didn't take profits or get rewarded on a way up. So now overnight, we had this 4185 and a half demand zone that we were watching out for. Price bounced off of it twice. The market opened up, and we did have the 4203 and a half supply zone that we were watching. So now going to a smaller time frame, we have when the market opened up, and referencing back to my example of last week, the common theme of last week was no momentum, low volatility, low volume, and price was just moving back and forth, testing different areas, and we were trying to build upon the story that the market was telling us. So the way I looked at it was new week, the market's still in the previous chapter, was still going on from last week's action. We have to keep that same mindset until it tells us differently. Then the market opened up. There were really no trades at this point. We're consolidating above VWAP. We missed supply by exactly 4 ticks, by 1 point. And we were just trading here. Volume was very, very weak. And in my opinion, that's a pretty heavy telltale sign that, number one, the market's choppy. And number two, setups and equities that are not showing relative strength or weakness is going to lack A+ high quality setups. So eventually the market started dipping, volume started to come in. However, even volume coming in was not really bringing it momentum. We were just selling off slowly. And then boom, we hit our demand target at 4185. So at the same time this was going on, let me pull up the Nasdaq right over here. So I watched the S&P and the Nasdaq. These are my main leading indicators besides price and volume. 2 other equities that I trade options on or trade the equity itself. So what I saw here on Nasdaq, pull this up, was yesterday's lows was getting tested, or Friday's lows was getting tested, and this was at the same point that we had the lows from Thursday. So this was a key area around 1382, 13830, and for those that are new, I do trade QQQ options off of this Nasdaq chart. I do trade SPY options off of the S&P ES chart. You could trade the future itself. However, to each his own. So we're watching a break below the lows at the same time because Nasdaq was moving up. It had some momentum, some volatility behind it. Then was selling off aggressively. It looked like almost the rug was pulled. There was really no direction. However, a failure to stay above the highs was imminent, and we broke below the lows. Did not have anything stopping us. If you look at the bottom left chart, really it was like no man's land. It had all gates open to sell off into this demand zone below that mark. So we were watching below this. I told members in the intraday commentary tab of the chat room, where basically I post my thought process of the day, stuff that I'm seeing set up in real time. I let everybody know what exactly it is, but I said Friday's lows on NQ must hold, or else we sell off into the 13786 demand zone. I'm watching to play puts here, targeting demand. I'm not interested in other equity setups. So at the same time this was going on, I don't want to bounce back and forth here, but Amazon was coming into demand, and Amazon was pretty much weak compared to the market. It was selling off, and we had this demand zone right here. Same time Nasdaq was coming into demand. I said I'm not interested in playing calls, especially with how weak the market is. Unless the market bounces, the story may change. So that zone broke below. No signs of buying. No real reason to take it long. Market sold off past the support level right into this demand zone, and this was at the same exact time, if you were to timestamp it, around 11:30, that the S&P 500 was coming into this demand. So when a lot of different things line up, that's kind of your go ahead to look for extra confirmation or be ready to strike. Sit on your hands for the previous couple hours of the day. Once everything starts aligning, you get proper confirmation, then you hit it. You don't have to take 100 trades in a day. All you really need is one good one a week, one good one a day. But we sold off into this demand. Bottom ticked it perfectly. I mean, to the exact tick. We had this little falling wedge, if you want to draw it like this. We eventually broke below, and SPY calls went up, I believe, about 20 or so percent. Usually I like scaling out at VWAP. However, due to the current market conditions, and this goes along with context, the market has been lacking follow through. So we did double bottom. And again, this is another valid area to get long. Very minimal risk. I mean, you're risking about maybe 1 or 2 points to potentially make 6 points if you're targeting VWAP. Even higher, around 10 points if you're targeting, we're going to call this makeshift supply right up here. We're going to draw it like this. This consolidation over here and this drop, not very aggressive. However, this is something that I would consider a imbalance to the sell side. So we're watching if we are longing at demand to maybe look to take profits here, maybe look to take it short. It depends on your perspective of the market. There's so many different variables the market throws at you. So there's so many different trades, risk, confirmations. You have to be able to do this on a blink of a fly. That's what I tell members all the time. So this time we rallied into that zone perfectly. I mean, you can't get much better than that. And then we sold off. So one thing I do want to note is I've been testing my credit spread strategy again. And I didn't take this trade personally, but I was just watching the contracts. And you could have collected about 35 cents of the premium. I've been testing this. I'm going to release some new videos to the course once I get enough data and once I get my edge back in credit spreads, kind of stop doing them. However, in these market conditions, it's been working very well. So 35 cents on, is pretty good credit in a matter of 20 minutes when we sold off from the supply zone, especially after bouncing off of demand. We're below this now, so now it becomes a little skewed. It was a call credit spread, the SPX 4205s by 4210s. Like I said, I will be adding videos to the course, the option course, on this as soon as I'm ready and as soon as I think we could all benefit that in the chat room. I think I'm going to end the video here. If you did learn anything from it, I'd appreciate if you could just smash the like button, subscribe to my channel, and if you want to learn more, check out the website in the description below. I do offer a very in-depth course where you will have access to the Discord at no extra cost. Besides that, I'm going to end it. Peace out.